everybody. Welcome back to the Everyday Growth Advisors live stream. Welcome back, EJ Tribe. I hope you're having a good morning. Happy hump day. It is Wednesday. We are going to break down the markets one more time this week and also be doing the intrinsic valuation for AT&T. Yeah, let's get it, guys. Thanks for all the comments. Good morning. What's up? I'm Cien. What up, Mark? Seabass, Kyle, and Morris. Cool. Morris, I'll get to your question in a little bit. How's everyone doing on warm Monday, Wednesday? I'm doing pretty good. It is pretty warm here in Singapore. That's for sure. I hope that you guys are doing good across the globe. We had a couple of companies report earnings yesterday. Microsoft, we had Boeing that reported this morning. We had a whole bunch more. Yeah, mainly I was looking at Microsoft and Boeing, actually. Those two were the ones that I was going through earnings reports. This is the time when I usually take a step back from the market. I don't enjoy punting or speculating during times like these. I prefer to take a back seat and let the dust settle before I make any quick calls. I'm still remaining somewhat hedged with some VIX options, but nothing too crazy. I picked up a SPY put yesterday, but just one, just to scale in. But it's more of like just a kind of a hedge bet on this week's volatility. I took a 417 weekly put, which was just mainly to hedge against any downside risk. So let's go through the news real quick. And sorry if I'm talking slowly. I'm kind of having a headache today, so I'm gonna go a little slower than usual because of that. So Biden unveils a massive family aid plan funded by taxing the rich. This is you can say it's more of a Democrat-driven kind of initiative, right? Complete reversal from what Trump would do, which would be reduce taxes on the rich, right? And so as long as he doesn't go too heavy on capital gains tax, this might not end up being such a big problem for the market. But he has to fund his bill somehow, and so he's using that method to fund it. Personally, if you ask me, I have no opinions on this. Different presidents will use different tactics to fund their spending, and so this is Biden's way. He wants to pretty much spend so 800 billion tax cuts, credits for middle income, lower income families, pre-kindergarten and community colleges free across the country, extend child tax credit through 2025. Okay, and then 2.25 trillion infrastructure plan that is yet to be taken up by Congress, and then the 1.9 trillion pandemic relief fund, which Biden has already signed into law. So a lot of stimulus going down here, and that money is being printed out of thin air. Well, not really printed out of thin air, but they're going to be selling bonds to fund this. And who's going to be issuing those bonds? It's going to be the Treasury. And so the circle goes on. This is for sure going to cause some added pressure to the already burdened debt. So that should be interesting. I think America's debt burden is getting pretty ridiculous at this point. But it is what it is. At some point of time, that bubble's going to burst as well. Standard Chartered, consider slashing Singapore office space. This makes sense. Could this be the new normal? Banks starting to slash their office space, asking people to work from home. Very possible. In other news, remember that this week the Fed reports, or rather the Fed decides on the interest rates. I don't think they'll shock us. They're going to hold the rate steady. And then, yeah, Fed meeting is, I believe, today. So let's have a look. Is it today? No, maybe tomorrow. I think it's tomorrow. Yeah, I believe it's tomorrow. Let me just double check again. This week. Clear and United States and this and then this should be tomorrow. Yeah. Oh wait, it's today. Sorry, it is today, Wednesday. Okay, cool, guys. High impact events today. Very high impact events. So my recommendation is not to trade today. Just straight up, just stay out of the market. Honestly, it's not. This is not a market to trade right now. Too many big companies reporting earnings. So let me show you what's going down today. Okay, it's just so you guys know. Now I know many of you will say, "Oh, but the volatility is opportunity." I can tell you something. It's not going to be worth it. Look at this. After hours, you have Apple, Facebook, Qualcomm. Okay, you have Ford, eBay. What else? All those companies reporting earnings. Win. Okay, you have those today. And then on top of that, add in the crude oil inventories, high impact news. All right, FOMC statement at 2 p.m., Fed interest rate decision at 2 p.m., and the FOMC conference at 2:30. Okay, I highly recommend to stay out of the market today. And then tomorrow, you have initial jobless claims, you have pending home sales, and then you have GDP Q1. Okay, you have Q1 GDP, and this will be the preliminary release of the US GDP. So this week is super high impact news, and I say stay out of it. It's really no point. You can always wait and hold cash and wait for the moment to deploy it. Okay, that's what you can do. All right, so that's that. I thought I should bring that to your attention. So make sure you don't go apeshit on anything today. In other news, Saudi Arabia to sell more Aramco stakes. They're trying to diversify out of the oil business and get into more green energy. I'm not sure if anyone's tracking what the Saudis are doing, but they have been very actively investing in green initiative stocks. Fidelity launches platform for fund managers to profit from short sellers. Interesting. Got to read that later. And Robinhood is customer service problem. We knew this. Credit Suisse, fined by EU for bond trading cartel. Okay, alternatives again in favor. Okay, cool. All right, well, that's your news summed up. Not really much going on today. Pre-market movers, Google up on a positive earnings beat. Facebook up on exuberance. AMD earnings beat. Ceilings, I'm not sure. Maybe a sympathy play on AMD. Microsoft down on a positive earnings beat, I believe. But then I think guidance was not as good. I haven't finished reading this report, or rather this earnings summary. I will probably finish reading it later. I was also reading Boeing's earnings forecast and stuff. So this is another thing. I also need to take some time to cover Boeing and Microsoft, maybe on Friday's live stream, since we'll have more time on Friday. Would you guys like me to do that? Let me know in the chat right now. Would you guys like me to cover both of these earnings reports and maybe a couple others too on Friday, since we have a bit more time? I could surely do that, and then also definitely think of a stock that we should go through for next week. This week we did AT&T. Next week maybe we can do a company that's reporting from here. But do you guys want me to go through a couple of these earnings reports on Friday? I could do a couple of them. Maybe Apple, Microsoft, Boeing, right? The bigger ones that are more important. Okay. Yeah, okay. I could do that. I was thinking we do a healthcare company for next week. Or we could also do like, we just did consumer cyclical. We could also do McDonald's if you want. We haven't done McDonald's before. Or we could do Home Depot. Or we could do an oil company like Phillips, or we could do Marathon Petroleum, or we could do something like that. Yeah, I'm still thinking about it. UPS beat FedEx. FedEx. Oh, we could also do FedEx. Oh wait, we have done FedEx. Oh no, we did UPS before. We did Caterpillar before. General Electric we've done before. Triple M, that's another one we could do. Yeah. We could definitely cover a oil company if you guys want. I would be down. ConocoPhillips maybe? Or we could do BP. You guys want to do BP? That would be nice. Think about it. Let me know on Friday what you guys want me to do. But I'm leaning towards either BP, ConocoPhillips, or something like that, like an oil company like that. That's what I'm leaning towards. Pre-market screener here. Let's have a look. Google, no surprise. Genpact, whatever that is. SC, Riata, AMD. Okay. Pinterest down 11%. Damn. Enphase Energy down 8%. Yeah, Amazon split rumors were already active, like I think day before yesterday. That's why the stock mooned. Also, other news. Charles Schwab sold a bit more of his shares. Not a lot, but about 3 million. And then we have another one of his, Craig Jonathan, whoever this guy is, senior EVP. And Salesforce. Also. Let's see, oil for sure, with everyone taking vacation this summer, being locked up, gas could go up. Johnny, don't mistake those two. They're not the same thing. Oil and crude are not the same thing. They're not correlated much, actually. Gas is, when you say petroleum products like gas, they're a byproduct of oil or crude, which has 7 different components. So actually, when you talk about oil prices going up, petroleum products might not actually increase in price. They're not directly correlated in a huge way, but of course it is somewhat correlated. But I think many people always make the correlation wrongly. They always say, "Oh, oil prices are going up, so gasoline prices are going up." No, that's not how things work, because different countries have different prices for production on oil, and then different production on petroleum. So if you guys have, I don't know how many of you guys have studied chemistry, but in chemistry and physics they teach you about fractional distillation, right? Where you have like a fractional column, and I learned this because I studied chemical engineering actually. First, before I got into finance, I studied chemical engineering. But you have many different layers of a fractional distillating column. It's almost 7 layers. 1, 2, 3, 4, 5, 6, 7. And, you have your different thing. Actually, hold up. Why am I doing this? My drawing sucks. I should be using Google to do the job for me. There you go. So much easier. Here. So this is your typical crude oil. Comes into a heated furnace and then gets heated up. Goes into a big fractional column like this, fractional distillation. This is how oil is separated into its parts. And then you get your fuel oil, you get your diesel, you get kerosene. This is for airlines. This is for your heavy lead vehicles, engines that are a bit using heavier production. Fuel oil is your other kinds of oil. Petrol, that's used by your cars, which you call gasoline in America, which we call petrol in Asia. Butane and propane, you know what these burn, like your stoves. Lubricating oil, paraffin, wax, asphalt, all of this stuff goes on your roads most of the time. So they have a much higher boiling and melting point. So a lot of these things, as I was mentioning, you can see out of all the components of crude oil, think about just what percentage of it is petrol. So do you get my point? The two are not heavily correlated. You have, there's a higher chance that all of these will go up in price, but that price gets spread out pretty far. That price gets spread out. Okay, I think you understand what I'm saying. So just as an illustration. Okay, Treasury rates kind of spiked up here yesterday to the 1.63 level. As I mentioned, I'm still aiming for a target of about 1.8, 1.9, and even 2% yield on the 10-year before we get a actual pullback. Pullback on the 10-year yield. I'm not talking about pullback on the market. I think the pullback on the market is, we're getting pretty close, guys. We're getting pretty close, right? Market's pretty far extended, okay? It can obviously keep going, but remember that at some point of time, we're gonna have a pullback again, okay? Today we have the Fed reporting. My recommendation, buy a couple of VIX options that are expiring further out, 1 to 2 months out, and hold them as an insurance bet. You could even do a debit spread, right? I have a debit spread. Do that. It costs you very little, and the risk reward ratio is there. So I would recommend doing that. Also, just to put it out there, have a look at the retail trader report here by IG Sentiment. About 31.87 of traders are net long with 2.14 is to 1 ratio. This probably will cause a further squeeze up. The more bearish retail gets, the more bullish the market gets, right? Just in an effect to squeeze. So that's that. AT&T, our ticker of the week, broke out, came back down, testing the 50 EMA. I don't know if we'll get the gap close right down here. Should be interesting to see if that happens, but that would be the bottom of the channel. So it is highly possible. Remember that this stock does pay a very hefty dividend, okay? Very hefty dividend. The only reason why I don't make this a part of my long-term investments is because it has a very, very slim economic moat, right? It has a very slim economic moat. However, they are a pretty decent business, and they're showing good growth trajectory, okay? Obviously, remember, this is more like a utility business more than anything, okay? In other news today, Tesla says that their Bitcoin investment is worth about $2.48 billion, by the way. They said the fair market value of the Bitcoin was about $2.48 billion. Which is to say that they are standing to make about $1 billion out of the investment in Bitcoin. I think the market is throwing a fit at this because of various reasons. Number one, Tesla's performance was not as lackluster as they expected it. And then number two, the market doesn't really look at Bitcoin as a cash investment, but I don't think Bitcoin's the reason why the market's selling off, because clearly when Tesla invested in Bitcoin, the stock started popping. So investors don't generally see the risk difference, because you remember, Tesla is more of a cult following, right? Even if Elon said something like, guys, go buy Dogecoin, or if Elon just put all of Tesla's money into Dogecoin, every one of those followers would go and buy Dogecoin. That it has a cult following, and so it's not really that investors are selling on. I think it's mainly the institutions are starting to realize that Tesla's momentum is starting to slow down, and that's what's causing the sell-off here. Okay. For a company like Tesla, which has so much of CapEx spend, which, by the way, this is bearish now, just so you guys know, Tesla is bearish right here. We broke below the pennant formation here. This could easily slide all the way down to the 670s or even the 650s. There's a possibility. Okay, just want to put it out there. If we do a Fibonacci retracement here, you can see exactly where we're going. So let's go right down here. So how did I draw that? I'm doing a swing high to the recent swing low here. I don't want to take this swing high here. I want to do this swing high. I prefer that swing high as a fraction of this entire. So I want the ratio between these 2 points, basically, right? You can choose whichever 2 points. You could have gone here to here as well. That's also, it's up to you, right? So looking at this, the extension would be somewhere at 646. If we were to draw where that would be, we're looking at somewhere here. If we get a 61.8 extension, the first levels to retrace to will be 678, and then after that 38.2. That's where we'll be looking at. So here, here, and lastly here. We'll go ahead and leave those lines there just to see where it ends up. I don't like leaving the fib on, so there you have the target zones for Tesla right there. This is pretty much like your demand zone now. So this is going to be your demand zone. It's chances are that we see Tesla come down into this zone pretty soon. Either one of these three. So a short swing here would make sense. If you want to wait for the confirmation, then I would say wait below this level right here, 697.85. Wait for the bearish confirmation. That means today you'll see a buy up, a rejection of the 700s, and then a continued downside extension. That's how you want to play this, okay? Wait for the buy up, the attempt to gap close. Wait for the rejection of this previous support here, and then on its way down, you can start to take this somewhere here. The 685s or the 690 puts make sense for a day trade today. Okay. I'll read this later. So, going through AT&T's intrinsic valuation, just want to go through a couple things. First things first, this company does not grow revenue at a very quick pace. In fact, it has been growing at a pretty steady pace, and then last year it took a little bit of a dip, and then this year it's it did a little worse than expected because of COVID, yada yada. Financial Cogs, they managed to kind of control the bleed a little bit, so they kept Cogs the same as 2018. This is a really nice, this shows the robustness of the corporate governance, that, or either that, or they have a very scalable business model. That's what I would say. It's very different. It's very difficult for the management to control Cogs to this degree, where you have an increase in revenues and you have an increase in Cogs, and then the moment that revenues dip, you see a dip in Cogs as well. Mostly for companies like AT&T, they have a fixed cost, and so the variable portion of it is usually very difficult to control. And because you think about what is their main expenses, it's like their power lines, their maintenance, their they have a bunch of inventory maybe, right? So it's good to see that management's really reactive to the situation that they're in. Income, it turned negative this year, which is why the sell-off happened. And they had a better than expected earnings, and stock retraced back down after. I think the earnings shows pretty good strength from the business. Continued strength in the balance sheet. Continued strength in growth, more importantly. Balance sheet's looking nice as well. They have a decent amount of cash on hand to weather a storm, right? And then as I was mentioning previous live stream, their main issue is long-term debt, which is what they need to pay down, which hopefully they will in the future. Okay, so that's really a main thing here. So looking at this equity-wise, they're doing pretty okay. It's just interest coverage-wise, that means long-term debt. Their assets and their debt are not exactly very balanced. That's one of the main things for me specifically. Looking at ROE as well, ROE history, not been a very stable ROE the past 2 quarters, and this past quarter has been dipping into the negatives, even though it's been lesser negative. But if you look at it before this, they've had a damn solid ROE history, right? All positive ROE quarter over quarter for the longest time, right? And I think that's very good. That's good strength. It's only coming to 2020 year end to 2021 where things got a little shaky because shareholders' equity started to get less because they had to take on more debt, okay, because of the COVID crisis. So that's something that you should take note of. ROI, internal ROI, the internal rate of return, pretty decent. Still managing to stay positive here. So the company is still making investment efforts to further enhance its business. These are metrics that you should know: ROI, ROA, ROE, debt to equity, quick ratio, current ratio. Those are mainly the ones that are important and you should be following along with. And then other metrics here. Okay, dividend history. So you can see they have a straight up track record of increasing dividends, for a heck of a long time. Okay, for a heck of a long time, and you can see the yield is insane. Look at the yield right now; it's still 6-point-something%. Look at the yield. Dividend yield is 6.75% for this company right now, and you can see that 6% to 7% is the high. It's usually the high peak of this. Okay, if I go back in time, even further back, you'll see 6% to 7% is the peak, and then it starts to come down again because the stock price cycles through. You can see this, right? Cycle, 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 right? And so you can expect another cycle to go down. So picking up the stock right now, it's a great idea. It's a great idea. Okay. Buying this business is great. If you want to hold it long term, you believe in AT&T, this is a great business to buy right now, in my opinion. You buy it when it's undervalued. It's showing good growth. It's showing good recovery, and then when things improve, boom, right? You're sitting on a really nice yield because you cost average your shares at a very low price. Okay. 6% dividend yield or 7% dividend yield is it's pretty unicorn, guys. I don't know if you guys know this, but it's pretty unicorn nowadays. You don't really get 6% very often. It's not a very common thing. Just in comparison, Coca-Cola pays about 3 to 4% per year. So 6% is double of that, just FYI. Okay, let's get on to the valuation here. My assumptions are pretty simple. Revenues to grow pretty stagnantly for the next few years, 3%, 2%. That's the average growth rate, by the way. I'm not exaggerating these numbers. I'm just going pretty conservative. And then I'm assuming in 2025, they will go through another plateau period of a 0% growth, midway cycle of the 10-year DCF, followed by about 5 years of consistent 1% growth, where they achieve peak maturity as business. I expect CapEx to be higher, and I have actually spread out the CapEx across the 10 years to reflect constant investments in upgrading their infrastructure, and then expansion of telephone poles, expansion of infrastructure leading to increased services, maybe 5G, 6G, 7G, 10G, whatever the heck comes out next, right? Working capital, keeping it the same 5.6% has been pretty consistent all the way throughout, so makes sense. Depreciation and amortization at about 16%, keeping it a little higher than usual. Tax rate, definitely increasing it. The 5-year average is 23%. I'm going 30 because of the Democrat government, right? And then the discount rate at about a 7.5 to 8.5. This brings our fair value of the stock at $36.93. So the fair value of this stock is actually undervalued, guys. $36.93. Boom, boom, boom. And intrinsic valuation done on live stream for 28, 21, 36.93. Okay. So this stock is undervalued. You'll be glad to know, based on my projections. And actually, oh, interesting. Okay, I didn't realize this, but now that I've put in the line, look at where the intrinsic valuation is landing. It's actually where a key level of support is. Do you guys see this? You guys see this? Interesting, huh? I find that interesting. So this stock has a 20% upside. It can make a 20% upside to 36.93. Has a little bit ways to go. And yeah, that's it. Okay, Amazon split rumors. Yep. XOM $60 call September 17. Okay, let's have a look. Oh yeah, you're good. Hold this one. FYI, guys, I still think ExxonMobil is undervalued at this price right now. I need to do another valuation of this business, but I can tell you that I think at $60 is still undervalued. The intrinsic valuation of this company is closer to 65, if I'm not wrong. But I will value this business again very soon. Yeah, Bradley, I think you're good there. You can hold it. How much did you pay for that call by out of curiosity? What was your cost basis? AT, I would love to hear your reasoning on why Tesla share prices dropped after great earnings. I kind of explained it earlier. I hope you caught some of it, but I'm also going to do more of my own internal understanding to give you a better perspective. What about a review of the Cushing report? Okay, we could do that. Plastics come from petroleum. Yes, that too. All your ethylenes and your... Yeah, that's one of the reasons why ExxonMobil is a great investment sometimes, because they have diversified into plastic business as well. How are you guys doing? I feel like I'm talking to myself sometimes. I kind of am talking to myself though. Well, if you guys don't have anything else, I will see you guys on Friday. We'll do a breakdown of Boeing, Microsoft, Apple, Facebook earnings reports. Maybe I'll do 5. I think 5 is good. Apple, Microsoft, Boeing, Facebook, and which one? What should we do last? Which other last company? Amazon? Which company you guys want me to break down? The earnings reports. What's the last one? Come on, somebody tell me. Hello? Anybody home? Oh, $1.90 for that call? Dude, I'm gonna cop some today. I'm for sure buying that one. Thanks, Bradley. I'm gonna cop some of those. $60 call for 917 is money. It's for sure money. I like it. And I think they're gonna beat earnings too in 2 days. Hey, I'm supposed to do the second live trading session with your team today, but if you feel like today's not a good day to trade, share with them that day. No, you can definitely join us for sure. Message me on Discord, please, and I'll give you... Wait, you have the link already, right, Johnny? So, yeah, definitely just click on the link and you'll be in. Alrighty. Well, Yeah, I'll be breaking down Microsoft on Friday as well, so don't worry about it. Okay. Guyzo, thank you for attending the stream today. I appreciate you guys. If you're on the way out, if you could smash the like button, I truly appreciate it. And don't forget to share the stream with your friends and family if you like it. And yeah, I'll see you guys on Friday. Peace out, guys. Take care.